Hey guys, it's Dave with Moniology. Hope everyone is having a great day. This is the weekend market review for October 28th, 29th, 2017, filmed one day later on October 30th. For those of you who are new to our videos, what we do is we take a look at some of the major sectors in the markets from daily, weekly, and monthly perspectives to give us a better understanding of what's going on, some of the sectors that are very hot, and those that might be in the middle of a pullback. So let's have a look at what's taking place in our markets today. So we start by taking a look at the 10-year Treasury yield at the 10-year on the daily chart. And while we're still very, very bullish on this long term, I think we're starting to see the beginning stages of a pretty a multi-week pullback potentially. If we refresh this here, wouldn't be surprised to see this particular pullback take us back to the 21 level here, and give us a couple of weeks, potentially months, to refresh this very nice run that we've had over the last couple of months. Now, taking a look at the weekly chart, we have broken out of this bullish flag pattern here, and to no surprise to us, we would expect to see actually some consolidation here, probably a retest of this breakout zone around the 21 level over the coming weeks ahead. Taking a look at the monthly, we've broken out of this particular bullish flag on the monthly as well. We've tagged that 25 level, and now we're going to see a period of pullback here, which is very healthy. But the big story here is that longer term, we're going to be making a run towards that 30 level, potentially even as early as this year. And as we've pointed out, we think that we're in the early stages of a major bear market in fixed income. Taking a look at the gold daily, gold is finding some legs here. We've pointed out here that we thought that this pullback might not be over with. Well, we think a pullback is indeed over. And why do we say that? Well, a couple things. One is we filled this gap here on this particular pullback. We've had a double bottom here, right above the 200 EMA on the daily, but we had divergence, and that's very, very important. When you double bottom and hit divergence on a very strong support area, as we've seen here, I think that this is going to be the beginning, or as when we're going to look back at this, this was the bottom here, potentially here, and we're going to make a run back towards that 1360 level. Eventually, we think that that's going to break to the upside. Taking a look at the weekly gold, we're back above 50 on the weekly RSI. This is a crucial level to hold, and frankly, we held it. We're just hovering below the middle Bollinger Band on the weekly at 1280. Once that breaks, a run towards 1300 is definitely in the cards, and we think that 1400 will be hit at some point this year. And while the gold juniors and majors have been absolutely massacred over the last couple of months, there's some huge opportunities here for those of you who do your due diligence and find the best companies. You'll do very well, and frankly, when the sector does well, even the poorest companies will rise with the tide. We'll be doing a video on precious metals in the coming days, so stay tuned for that one. Gold on a monthly chart, pointed this out before, we're at the very, very cusp of a major breakout in gold. Now there's some resistance here, understandably so, but this is unquestionably going to break higher, and we're above the 50 on the monthly RSI. We've consolidated here above the 50 right now, and for next couple of months, expect this to rise. And next 2 to 3 years, wouldn't be surprised to see 2,000 in gold. So those of you who are gold bears, there's really no reason to be bearish at this point when you're looking at this chart. Now, the high yield ETF is one that we are very interested in. Multiple reasons. One is it tells us what the what credit is doing in the markets. If you think that the equity markets are going to pull back, you want to see this particular instrument pull back first, and we're starting to see some weakness here. If you can draw a bearish wedge here that broke down. Now we're below the middle Bollinger Band on the daily chart. We're testing it from the downside, but RSI is weakening here, and it's creating lower highs and lower lows, and we think that this is eventually going to break down, but we shall see. Let's take a look at what the weekly is telling us, and here again, this kind of gives you that perspective that we've kind of seen here in terms of the bearish wedge. Broke down. Now we're creating this new trend to the upside, but we think that this is eventually going to break. But we'll see. We'll have to see what plays out. The weekly MACDs are starting to roll back below zero. For us to go short on this particular index, we want to see a break below the middle Bollinger Band around that 36.88 to 37 area. On the monthly level, there's nothing to say aside from the fact that MACDs are curling towards zero. That's not to necessarily say that price is about to roll over, but it's a development to consider, because if things do roll, if the MACDs do cross below zero, then that can premeditate a very, very strong bear market in equities and likely foreshadow a recession. Now, crude oil, again, we had a video a couple of weeks ago, kind of called out the great legend Peter Brandt, who we respect tremendously. He had a report saying that he expects crude oil to sink again based on his charting analysis. We just completely saw the opposite picture, and so far it's playing out in our favor. We broke out above 53, now at 54. We think that we're going to hit 55 very soon. As soon as 55 is broken, we're going to make a run towards 60 to 62, which we think we'll hit at some point this year. The crude oil weekly, it just looks very strong. We're hitting multi-year RSI highs over here. So now we've got positive divergence where we're at 54 now, but when we are at 55 multiple times, RSI was actually lower than where we are today. So don't be surprised to make a run towards that 200 EMA at 57.61 and shake out some shorts and probably consolidate above 55 for a couple of weeks thereafter. Monthly RSI or monthly chart here on crude oil. This is an inverse head and shoulders here that's taking place, and I've been pointing this out for a while. And this is gonna, once this neckline is taken out around 60, expect to make a run towards that 80 zone. So there's some significant upside in the coming years for crude oil, and this is a sector you want to be in. Nasdaq daily. Looks great. Nothing to see here. Every time it drops, it seems like it rallies harder. The one thing is we're making new highs, but RSI is not. So there's a slight negative divergence, but nothing to write home about. Till this is breaks below this middle Bollinger Band on the weekly, around 64.05. This is in a very strong and sustained bull market. Nasdaq monthly. Well, you could say that the wedge broke down, the bearish wedge broke down, but now we're retesting it from the downside. But at this point, there's nothing to complain about. Russell's. Now the Russell looks weak. Russell looks weak. We pointed out here we were consolidating for a couple of weeks with negative divergence. Thought we might have had a rally, and now today was a very, very weak close. And expect to see some further downside in the Russell. Very likely going to take out the 50 EMA at 1468, possibly stage a rally, but ultimately we think we're going to retest this 1350 level. So there's some significant downside here if our perspective plays out. Here again on the weekly, again this 1400 area is likely next strong support here as that matches that middle Bollinger level at 1438. Now Russell monthly still looks great. We're above the 70 line in the RSI. It's very overbought, but that's where you want to be if you're in a sustained uptrend. And so there's nothing to suggest that we're breaking lower or starting a new bear market at this point. Now the S&P is diverging here, making new highs, but RSI is not confirming, which gives further credence to the argument that we might be pulling back. Weekly starting to curl here. Again, this is just not a market that we would short, and definitely not a market we would want to be long at this point. There's just a lot more upside elsewhere. Looking at the tips to 20-year Treasury ratio, this is the ratio that basically tracks inflation, and now it's starting to roll over here on the daily. This coincides with our 10-year Treasury charts that suggest we might be having a bit of a pullback in yields over the coming weeks ahead. Again, bullish breakout. Now we're going to have some multi-week consolidation above this breakout before heading higher in inflation. Monthly, no surprise that below the 50 there's some strong resistance at this point. It's going to be taken out. It's just a question of when, not if. And now taking a look at the dollar, one that we've been very, I guess, right on in terms of our perspective. We call the top around 103. We said we'd see a bounce around the 90 level to about 94 to 97. Now it's very possible that this run is over. Precious metals are starting to get their mojo back, and wouldn't be surprised that this is the end of the dollar's run. It's possible we make one more flush above this 200 EMA to shake some shorts out, but I think we're at the very late stages of this dollar rally. Again, it needs to break this 50 on the weekly RSI, and it's struggling here. Coincides with this 50 weekly EMA at 95.81, and everything's looking like this is going to be a weak rally, and we're going to start curling back over eventually towards a price target of around 87.50 or 80 to 87.50 as the final bottom in the dollar, possibly as low as 72.50. Don't think that that's going to happen, but never know. Volatility. Well, the daily volatility is, we on the one hand we have this nice little run here, but we broke down below this trend line on RSI, and now there's really nothing to say here. The weekly though is starting to show some legs, and if we can break above the 50 on the weekly RSI, we expect to make a run at the very least towards the bottom of this downtrend line. This still looks like a bullish flag to me, and ultimately if this breaks out, then that's going to be your kind of confirmation that we're probably starting a multi-percent pullback in the markets. Ooh, 5%. Anyway, the monthly, just a bit of a perspective, it's starting to tick up again. And finally, let's have a look at the world index. So world index has had a nice pullback over the last couple weeks, but now it's starting to curl back higher. It still broke down below the weekly uptrend that it's had since basically November of 2016, and we'll see what it does here. If it can't break above the 2000 level, then likely starts really pulling back, probably to take out that 200 EMA around that 1774. So 1750 would be some logical support if we do pull back. Finally, taking a look at the monthly chart. Well, it looks very good, but there's a lot of resistance here. This is where we really crashed in 2008 when RSI broke below that 70 level. Well, now we're retesting that from the upside. Now we have multiple points of price resistance here around that 2000 level. So if we can't take that out, expect to see a pullback, possibly a multi-month pullback in the world indices. Anyway, guys, thank you so much for watching. Let us know what you think. If you like our videos, please like us on the YouTube channel, share with your friends, subscribe to our videos, and do follow us on StockTwits at Moniology and Twitter at Moniology. Look forward to being in touch, and have yourselves a wonderful week. Take care, guys.